Today we're going to take a review of the week in the market. This week it was a good week for me. I hope it was a good week for you. I mean, we had all time highs, stocks getting picked up, some getting hit, and I'm just going to get straight through it. Stick to events for the end of the video. I'm going to do a stocks I'm looking at for next week. Big week next week also, but I'm just going to get right into it with Alphabet. Had a good quarter this week. The stock was up 10% on Friday. I don't think the report was that good to boost up, but the stock was ran down so much. So essentially, that's what happens. When you look at these things, you have to look where the stock has come from. So obviously, if the stock is sitting at an all-time high right before earnings, there might be some profit taking. The stock might get hit. But if it's on a 52-week low or got hit real hard, or close to it with stocks, and it has a good quarter, it doesn't even have to have the best. It just has to be better than was priced in at the time. And if it blows it away, or just the stock's going to go up pretty high. So essentially, that's really what's going on there with Google. They had some better numbers on YouTube, which is funny because I kind of figured that because YouTube, right around when the stock got hit, YouTube started doing double ads. I don't know if anybody else noticed that watching YouTube videos. I did because I watch YouTube a lot, and that's what it was. So they're doing more monetizing things. So they got hit. So essentially, that's just Google being Google, you know what I mean? They adapt, they change, and they do things. So essentially, that's really for Google. That's why I was saying buy. I can leave a link down in the description. That was cool, more of why it crashed and why it was down, why I was recommending buy it. I'm a big long-term shareholder of Alphabet. I think it's a great company, Google, whatever you want to call it. But anyway, moving on to the next company is Amazon. Amazon got hit. But once again, the stock ran up a little bit before and it got hit. So essentially, and I think it was a great quarter. Well, maybe not great, too much. It was a good quarter. It was a good quarter. They had good quarters, and they had lower earnings, and all the headlines were saying, "Oh, this ends Amazon. Their earnings is over." But Amazon, well, at first you have to understand why they missed the quarter, why they missed expectations in earnings, is because they're actually spending a lot of money into one-day service and one-day packaging and one-day delivery. So essentially, that costs a lot of money to do that, and that just shows you. There was actually a good video on YouTube. I might leave it in a link if I can find it again. I got it on my Facebook page. I can leave a link down there. Watch that interview. It was from 1999 when Jeff Bezos was going on. Customer service first, and that you can see this is a company that doesn't really care about earnings per se. It cares about its customers, and that's really amazing. One-day shipping for Amazon, that's incredible. As a consumer, I'm definitely probably going to buy more things at Amazon. If you can get them the next day, if you can buy something, I can order something right now and get it tomorrow, that's amazing, you know what I mean? Think about that. I mean, I remember when you used to order things online, it would take weeks or 2 weeks, you know what I mean? Hell, one day is amazing. So essentially, that's why I like it. AWS was a little lighter than it was. I think it was 42% last quarter. Now it's around 37. So essentially a little light, but I mean, that's just kind of a big growth thing. So essentially, but top line for Amazon was actually up more. So essentially, I feel that's just a miss. I think it'll be a slight pullback, but I think next quarter it'll come right back. So essentially, it's Amazon. Nothing really to worry about there. That's just Amazon being Amazon, reinvesting its money back into the business to grow that top line, and really that's what early Amazon's really looking forward to. It's all about, and if you look how much free cash flow Amazon actually has, it's incredible what they've done. And anyway, moving on to the next one. Is Visa. Visa is one I recommended, and it's really just a customer I don't know what to call it, customer confidence. So essentially, customer confidence. If people spend more money, Visa makes more money. So essentially, that's what it is, and it's almost incredible that Visa is a $400 billion company. I mean, think about that company. And nobody really talks about. Nobody really knows anything about it. And Mastercard is slowly creeping up there too. I think they report maybe next week. But anyway, Visa's one of these companies. Like it's like this sleeper. I mean, it just keeps creeping up, and it's been an exceptional win. I mean, this year even if years and years ago, if you would buy anywhere in the last 10 years, you would own amazing with the stock. And it just keeps clicking up. It pays dividends. I mean, it's done amazing. It's really almost time to really look back on it. I mean, how much far Visa has come. I mean, Visa is an amazing company, and it will continue. I mean, it really is what they've been doing. So essentially, and they ain't done yet. So essentially, I mean, think about, because it's basically simple how their business works. Every single time you swipe your card, they get a percentage of that. So essentially, that's how it is. And they're done amazing things, and it's a $400 billion company. I mean, think about that. I mean, it's almost 2 Netflixes. Just to put, 4 Netflix. I mean, Netflix is around 120, so essentially 4 or 3 times bigger than Netflix. I mean, everybody goes on about Netflix. That's almost bigger than Facebook, almost. I mean, it's almost about 100 billion off, but still, I mean, that's only a couple. I mean, Visas just keep going. But anyway, the next one is PayPal. PayPal missed its top line. PayPal's a little different. I mean, it's PayPal for some reason. It's one of these things, just like Visa, all these cashless kind of stocks. For some reason, they always have good this and good numbers or decent numbers, and they always get hit. Even Visa got hit. I don't understand. Some of these stocks like MasterCard, when it reports, it probably could take a hit. I mean, Square always takes a hit. They always take a hit, but then they always recover. So essentially, it's just kind of weird how it works. And now for really, really big news on the trade desk, it does a deal with Amazon, so now it can sell space on Amazon. I think Fire TV, so essentially that's huge for the trade desk. I mean, think about all them people that want to advertise on Amazon, all the people that use that. I mean, that's huge for trade desk, and that's what sent the stock up. I think it was almost 9%. I mean, it shot up. I mean, as soon as that news came out on Friday, I mean, it shot up. It was sitting around 3% and went boom right up to 9. So essentially now I think it's a 220 or so, 280 actually, 220. Jesus Christ, but 280. I mean, this stock has just been on fire this year. I mean, really about 3 years when it IPO'd, this stock's just been crushing it. I mean, so essentially that's what it is. I can leave a link in the description when I recommended it and talking about it. I mean, it just crushed it. I mean, this stock is, and I believe it will continue. I mean, it always kind of scares me when they run up a little bit like that, and a lot. I mean, it's a great deal, and that's a great move for them. They also moved into China, so essentially they're just a huge. They're going to be a big business one of these days if they can deliver on everything, and they're already profitable. So essentially, I mean, they have big opportunity at the trade desk, and that's why I keep recommending, keep talking about it. I can leave a link when I recommended it to buy it, and it's been a fantastic stock now in the last couple years. Hopefully going forward, so essentially it could be doing well too. But anyway, now this stock is the stock that got hammered this week, and I've never recommended it. Never. I mean, I liked it. I never really liked it. It's always been on the okay list, and that's Tesla. Tesla got hammered. I might make a separate video for just Tesla and why I don't recommend it. I've been saying why I don't recommend it, and it's just why I never recommend it, because actually, if you look at the balance sheet of Tesla and the cash flow, and it's unprofitable, this company could go out of business by the numbers in the next year. I mean, it's shocking to me. And essentially, and then you have to think about it. This company is trading the same market cap as Ford Motor Company. I mean, that has hundreds of billions of dollars in revenue, and I think $6 billion in earnings, and Tesla sells more market cap wise. I mean, it's scary to really think about. I mean, these people that are buying Tesla, I mean, at these valuations of Tesla, I could not imagine someone that bought it at $300, $400. I mean, I don't even think, why would you? I mean, that was almost scary. I mean, I don't know. It's just people straight up gambling that never really took an accounting course at all. I mean, really, you have to know accounting. Honestly, the best book for accounting, that's real cheap and you probably get it on Amazon. Maybe I'll leave a link down there in the description, is Accounting for Dummies. I mean, it's a really, really good book. I always recommend the Dummies books, you know, the Investing for Dummies, the real estate, the stock investing. And it had Accounting for Dummies, and I picked it up, and actually it was a really, really good book. It's entry level, like all the Dummies books and all that. I mean, that's really, really good brand. I know that might sound stupid or whatever, but that's a really, really good book for accounting. And just look at it. I mean, basically, I mean, I'm not going to get into maybe details of why it might go out of business. Now, the CEO, Elon Musk, just said we're going to be profitable, or they will be profitable next quarter, and then profitable by the fourth quarter. I hope so. I hope so for the shareholders, because it's not like I hate Tesla. I don't hate the company. You know what I mean? I actually don't like or dislike any company that I buy. I go by the numbers and what the business does. I don't buy a company just because I like the company and like the CEO. And I think a lot of people are buying it, and, you know, they're just getting biases and just stupidity. Really, that's what it is. I mean, if you're buying it just because you think the when he was on Twitter and thought he was funny or whatever, he was flying cars up in space. I mean, come on, you know what I mean? It just got ridiculous with Tesla. I mean, and I'm glad it's slowly, because the market always, it's like the old saying with Benjamin Graham, you know, in the short term it acts as a voting machine, in the long term it acts as a weighing machine. So essentially that's really what's going on with Tesla. That's what happened with all the marijuana stocks. So essentially, I mean, people say they're going to do well, and that's kind of the voting thing. You know, you vote on your best ones and the best performer. Then in the long term, it kind of weighs in, and it's Tesla's getting definitely some weighing in, and people are really, and it's risk management. I should make a whole video on risk management, because that's really what this is. I mean, this is just total risk management. I mean, you have to really think about what is the total gain, even if it doubled from at these positions to go up to 400, that'd be an $800 billion company. I mean, think about it. Ford is about 38 billion. So essentially that'd be twice as big as Ford, twice as big as GM. I mean, you could buy GM and Ford for the same price as Tesla if it doubled from these positions. I mean, come on. That's Chevy. I mean, Jesus Christ. You just walk down the street and you can find Ford, GM, and I mean, GM products and all that. So essentially in Ford, I mean, it's just crazy. I mean, it's just crazy how much the stock is really worth. And people never look at that. They never look at the market cap. You know, so essentially it's just crazy how much Tesla went up. But anyway, I might make a solo video on just Tesla and stuff, because it's always just kind of stock just kind of goes crazy, and I think it's just. But anyway, and now I don't want to make this too long. But anyway, the stock I'm looking for outlook next week. It's Shopify. Shopify has been it's basically obliterated the market this year. I mean, it's up almost 3 times since. I mean, it was sitting around. I think New Year's Eve I saw it at, I think, 112. So essentially 112. Now it's at 300, and I think the last time I looked at it, 338. So it's just been a market basically obliterator. I mean, really, I mean, this stock has really crushed it, and I hope it. I mean, over the last 3 months, it's up over 50%. I mean, Jesus Christ. I mean, I've honestly, it almost reminds me of Nvidia back in 2017. I mean, this stock is just rocketed. You know what I mean? It just gets, and it might be, it could go up a little bit more. But I mean, it better put out some good numbers, or it's going to get hit, and it's going to get hit pretty hard. So essentially, that's the stock I'm really focused on. Is Shopify. I really want to see the number. I feel like if it pulls back, and it doesn't completely mess it up and have some really bad news, you know, they lose a whole distributor or whatever, they lose a lot of this. But I believe, I mean, it could be easily some profit taking if it doesn't. It would have. Shopify next week better come out and just crush the numbers, or the stock's going to get hit. I mean, there's no other way around it. I mean, that company is almost a $40 billion company and only has $1 billion in revenue. I mean, that's 40 times revenue. I mean, it's definitely a crusher, but I mean, so essentially I don't really sell it because God only knows what could happen. It could come out and crush the numbers, hopefully. That's what it does. But anyway, that's all I'm going to get into this week. I know this video went pretty long. Thank for subscribe. And that's why I recommend all these stocks and do daily updates and everything. And anyway, thank you for watching. Thank you.